A record week for stocks on the back of the presidential election. But which names stand to benefit from a Trump administration beyond what's already priced in, and which ones could now be at risk? We're breaking down the winners and losers in a special edition of Three Buys into Bail. Victoria Greene is here to do the honors. She's G Squared Private Wealth Chief Investment Officer and a CNBC contributor. Victoria, so many big, juicy moves to pick from. But we're starting actually with something a bit ho-hum, if you'll forgive me. The first buy is Walmart, which is coming off its post-election all-time highs and still on pace for its 11th positive month in 12, as investors are looking to see if tax breaks or tariffs could kind of help other competitors more, maybe. Why is this a buy for you?
Okay, so this is a buy because it makes $665 billion in revenues, give or take, per year, and an average tax rate estimated for fiscal year 25 of 25 to 26%. Every percent corporate tax break that they can get is a huge, massive savings to them. Not only that, but they're also the major buyer of most of their suppliers. They typically give 15 to 20% of a supplier's revenue, so their ability to say, hey, supplier, eat more of those tariffs, and we're going to not have to eat as much on our end, that's huge. So companies like Procter & Gamble, Kraft Heinz, Pepsi, those might get pressured from Walmart that, hey, if there's tariff that increase costs, we're going to need you to eat those costs because we're your biggest buyer. And so I think their scale is huge. And then any corporate tax breaks help them. This is a $100 stock. It's a fantastic stock pre-election. It's even better post-election.
We were just talking with a different analyst about how it's sometimes 20% cheaper than competitors. And what you're saying would widen that value even more. So that's a really interesting take. Let's move along from Walmart to Goldman. Goldman Sachs also hit all-time highs on Wednesday. The financials pumped on the Trump trade. Maybe there's more deal making to come. They had an earnings beat in October on better capital markets. Could see even more of a new boost now. Why do you like this one even after this? Because the other day, our friend Charlie Babrinskoy told us he likes to buy it at 1 times booked, sell it when it gets close to 2, and it's getting closer.
It is, but for me, this is a couple-year hold. This is not necessarily a trade for me. I love this stock. I think deal making is going to open up, M&A is going to open up, and that's Goldman being Goldman. Their deal making and their investment banking and their currency trading and their fixed income trading and their equity trading, that's where they're going to make their money, and it's great in this administration. I think you should definitely be long financials. I know there was a huge pop-up on Wednesday, a little bit of a give back yesterday, but I think financials in general are a great play, and for me, Goldman's one of the top names that should benefit from some of these policies we anticipate seeing just because of their scale in the deal making. M&A markets have been pretty frozen. IPO markets haven't been that hot. I think Goldman's going to definitely benefit if those heat back up with a little bit less aggressive FTC out there.
Yeah, the other investment banks as well. We're seeing 60-70% gains now year to date. It's pretty incredible. All right, let's turn to energy then, because your final buy is Energy Transfer. And congratulations to Graham Cobell, IWC, who guessed our mystery chart. It's a pipeline giant, and it had 52-week highs yesterday as they expand operations to more power plants and maybe look to get into the AI game by providing power to data centers. This is a buy for you. Why?
Absolutely. I think this is a $25 stock, hands down. Number one, you're sitting around collecting 7% distributions as you wait, but this has huge run-up potential. They've had a lot of mergers and acquisitions. They're building scale, building in the Permian, and also they mentioned the AI trade. They had over 40 companies approaching them in 10 states saying, hey, we want to talk to you about hooking up into power plants. So that is a whole new revenue stream that really wasn't on the radar 12 months ago. I think their EBITDA growth easily surpasses the 10% bar. And for me, this is a company I look to continue to grow in a more friendly administration, especially if they get like Charles online. And so of the areas of the world that benefit most likely from the Trump administration, natural gas pipelines are probably one of the key industries you want exposure to.
That's what Marco Papich was talking about earlier this hour. Stock's around 17. For those who are listening, you said maybe could be easily 25. Okay, let's turn to your bail now. For solar, they're the American solar play, but Wednesday was their worst day since 2021. They're still positive over the past year, but it's the outlook for the whole industry now. Questions about those tax credits and the Inflation Reduction Act, which do you think they look uncertain now?
I do. I don't think we're going to get a full rollback of the Inflation Reduction Act, but I think there's risk their gross margin could fall from those 45% level down to a 25% level. Look, they sold over $600 million of tax credits last year. That was a huge benefit to them on their cash flow this year. All of this stuff just is in flux for me. And it's not just for solar. I'm not very positive in solar in general. I'm sitting this trade out, but First Solar was one I wanted to highlight because they do have an American tilt, but it's not protected enough. They still get about 20% of their supply chain from China, which could pick up, and then they sell to third parties. And if those third parties slow down, then they could continue to see pressure on their sales. And I just see that whole solar industry slowing. I don't see it stopping. I just see it slowing, which I don't want to own right now.
All right. She's staying away. Victoria, have a great weekend. Thanks for joining us.